I'm going to break down one of the best swing trade models that you can use today that is not only simple but yet very consistent. This model is perfect for anyone working a job or cannot be at their screens for hours on end and prefer more of a swing trader approach with low risk and high reward. Watch till the end of this video, as I'm not only going to break down strategy itself, but give you a step-by-step trading plan that you can follow on a daily basis for your trading success. Before we get into the video, make sure you guys are following me on Instagram at Arkhamtrades. Thank you. The model we're going to break down is the ATM swing trading model. What makes this model so powerful is the use of divergences between correlated assets on the higher time frames. If you are unaware of SMT divergences inside the marketplace, they are a great confluence inside the market that you can use to anticipate a reversal taking place. So when we're looking at correlated assets, let's say GBP USD and Euro USD, and in this depiction, let's say GBP USD fails to take out this high, yet Euro USD does take out that same old high. This is a clear divergence inside the marketplace, and when we get a breaker structure below this low, price should retrace back up into this mitigation block level for that continuation to the downside. We can say vice versa for a bullish push higher. As you can see here, let's say this is XAU USD and silver, and as you can see, gold does take out that low, yet silver does not take out that low. So as silver breaks structure to the upside, this last up close level is our bullish mitigation block, which we can then tap into for that continuation to the upside on silver. Now let's get into the trading plan. For our first plan, we want to be trading on the 1 hour time frame. Before we can start looking at this pattern, we have to formulate a plan. Choose the pairs you want to be looking at, whether GU and EU, gold and silver, NZD USD and AUD USD, or S&P 500 and NASDAQ, and then mark out recent highs and lows inside the marketplace for those correlated pairs. After marking out the recent highs and lows, you want to set limit orders at the highs and lows for both the correlated pairs and walk away until an alert is then triggered. After the alert is then triggered, you want to look at the correlated markets and identify, is there an SMT divergence between these two correlated pairs? If so, mark out the highs and lows before the run into the liquidity pool, essentially anticipating a breaker structure. So as we get the alert, as gold breaks below this low, we want to look at silver and identify, is there SMT? There clearly is, so we want to put an alert back above this high here on silver and anticipate that breaker structure. Once we get that alert that we have broken structures to the upside, we can then put a limit order back down here into our mitigation block level, stop loss just below the mitigation block, targeting opposing liquidity for a 2-to-1 Now let's get into some live market examples and see this in action. So we're looking at gold and silver here, gold to our left and silver on the right, and we can already identify this low inside the marketplace as well as this low inside the marketplace here on silver above these highs as well. So we want to anticipate, is the marketplace going to sweep this low or sweep this high and create an SMT divergence to where we can then capitalize on our move. So let's see what happens. We can clearly identify here that gold has taken out this low, yet silver has not taken out that same low. So if we can get a breaker structure to the upside here on silver, we want to anticipate price reaching back up into this mitigation block level for that continuation to the upside. So let's see what happens. We can see that we have broken above this high, leaving this level as our mitigation block, low, high, lower high. So if we can reach back down into this mitigation block level, I want to take longs, stop loss just below that mitigation block, targeting back higher prices for a 2-to-1 So let's see how this then plays out. Price then taps into our mitigation block level just like so. And we eventually reach up for higher prices. So as we can see here in this depiction, we had that SMT divergence between gold as well as silver. We broke structure to the upside here on silver, taking out this buy side liquidity. And as we can see here, this last up close candle creating this high is our mitigation block level. So as price came back into that high level, we took our longs 2-to-1 back above this buy side liquidity. Let's get into our next example. Now we're looking at GBP USD on our left as well as Euro USD on our right, and we can already identify a SMT divergence where GBP USD did take out this low, yet Euro USD has not taken out that same low. We have this buy side liquidity pool above us, so as we break above this level, our alert will then get triggered, and we'll see if we can get some type of retracement move at this high for a continuation to the upside on Euro USD based off of the SMT divergence. So let's see what happens. As you can see here, we have broken structure to the upside, so our alert is now triggered. We come back into the marketplace and we put a limit order back above this high, putting our stop loss just below the mitigation block. So these up close candles create that mitigation block. I want to put my stop loss just below that last up close candle, targeting back higher prices for a 2-to-1 R. And now let's see what then happens. Price then eventually taps us into our level, and then TP is now hit just like so. We had that SMT divergence between GBP/USD as well as Euro USD. We identified that Euro USD had a stronger SMT divergence, failing to take out this Asia session low, while GBP/USD did take out that Asia session low. So we had the stronger SMT divergence on Euro. We had this sweep to the downside, still failing to take out that Asia session low. Very, very solid. And as we broken structures to the upside above this mitigation block level, we put our limit order at that high, stop loss just below the mitigation block, targeting back 2-to-1 R. Now we're looking at AUD USD on our left as well as NZD USD on our right. It's 6:30 and we're analyzing the marketplace. We can identify there is a clear SMT divergence, where as you can see here, AUD USD came up and took out this high. This is that Wednesday, March 13th at 9 p.m. high. And that same high right here, Wednesday, March 13th at 9 p.m. That high is all the way up here on NZD USD. So we have a very strong, very strong SMT divergence here between AUD as well as NZD. So overall, very bearish here for NZD USD. So if we're looking from high, low, lower high, we want to see a breaker structure below this lower level, because this is our mitigation block. And if we can get that breaker structure lower, we can then take that retracement move for that continuation to the downside. So let's see what happens here on NZD USD. We then get that breaker structure to the downside just like so. We're going to put our limit order back here below this low, stop loss just above the mitigation block level. We'll actually put it above this high just to be safe, and we can extend this out, aiming for a 2-to-1 R inside the marketplace. So we're anticipating a retracement back into this mitigation block level for that continuation to the downside. And let's see how this then plays out. So eventually taps us back into our trade idea just like so. Very solid. Let's see how this goes. And then eventually TP does get smacked. Very solid, very straightforward. We had that SMT divergence. As you can see here, AUD USD took out that high, yet NZD USD was nowhere near that high. Then marked out the structure between high, low, lower high, broke below that low level, and as we retrace back up into that same low level, which is that mitigation block level, we took our short for that 2-to-1 R. TP then gets hit. Very straightforward, very solid. So that's gonna be it for the video. I hope I gave you guys a lot of value from this video, and you can further support me by smashing the like button, subscribing to see more videos like this from me in the future, as well as comment what you guys want to see next. I'm Arkham. Be safe. I have released my private mentorship where I give daily lessons on technical analysis, fundamental analysis, psychology, risk management, as well as live trading and much more for your trading success. If that's something you guys wish to check out and want even more content and gems from me, not shared anywhere else, it will be the first link in the description or the first link in my Instagram bio if you wish to follow me on there as well, at Arkhamtrades. Thank you for watching.